Hello, everybody. Today is Thursday, July 19th, and we're bringing you a Block Digest special edition with guest Ansel Lindner. You want to say hi to everybody, Ansel?
What's up? Pleasure to be on.
And for some reason, we wound up with an extra Blake Anderson.
Why does Blake suddenly appear every time Blake is near?
We get triggered.
Rick, I think, is having a little bit of internet trouble, so it might not be on video today, but what's going on, Rick?
Oh, network trouble, man. Connection issues. Gotta call the people. There's problems. But it's great to be here with Ansel in this discussion, man. I'm looking forward to it.
Mm-hmm. And Janine, what's up?
Yes, I'm the divergent one in terms of time zones.
Midwest represent. Well, I guess I hope at least that everybody watching knows Ansel from the Bitcoin Markets podcast. It's definitely my favorite out there that actually covers like market dynamics, and it's in general one of the only other podcasts I really listen to nowadays. It's partly a matter of time and just partly Ansel. Like, he does some fucking good work. Like, he does his research, and he's not a guy just sitting out there pointing at a chart telling you to make an exact trade, which is something I really fucking respect. So I guess I don't know, to really start off, we were pretty much going to kind of cover today just general like market dynamics and specifically like Ansel's kind of thoughts and analysis on that. But I kind of wanted to start off like what kind of led you to like the way you kind of cover the market aspect of things, and just like the like kind of, at least from my perspective, like the real impartial way you do it, where you kind of try to offer people like the case for both directions and really like all the variables in it for them to kind of make up their own mind.
Well, thanks for having me on here, guys. This is it's an honor for me because I watch, how many episodes you guys on now? Like 120 or something? I've watched probably 100. So
That's awesome, man.
Yeah, it's awesome to be on, you guys. It's really it's non-biased in a way that you guys report, and you give the real news versus there's a lot of other channels on YouTube that are just all pumping scam coins and stuff. So your guys' channel is great. Yeah, I got into doing the podcast mainly. I mean, DeRose back in the day, they said the hardest part was starting. So I was like, F it, I'm just going to start. And I started doing this coming from the gold world, where a lot of the conversation is about market dynamics and fundamentals. There's not a ton of like charting of gold out there. So I kind of came in on the news aspect and the fundamental side. And over the last 2 years have picked up more and more on the technical side, and grown with Bitcoin, because Bitcoin has grown so much since I've been in for 5 or 6 years that I'm still growing with Bitcoin, and I hope the show represents that.
Mm-hmm. I mean, it's like I said, that's like really like especially like a buddy of mine. He's kind of floating around the world with his fucking trade gains right now. I haven't talked to him in a while, but like he first like turned me on to you, and like he really like specifically listened to you for like kind of the market dynamics, and like specifically like how different news and events and just kind of like the structure of everything really inform that. So kind of to like dive into I guess like the next rough topic. Like, what are your thoughts like on like the general kind of like market structure like right now? Like in terms of like, the liquidity and how that's moving around, and just generally like, what's really the fundamental driver of the price, I guess, and then the factors involved with that?
Well, I think the fundamental driver of the price is like monetary adoption, right? And it's going to come in stages, and each like almost like business cycles, where there's going to be adoption, and then there's going to be overshoot, and then there's going to be a consolidation period. So I think that we're in this consolidation period. A lot of people call it a bear market, but I don't. I say we are sideways. Like on February 5th, we hit 6,000, and only 6 weeks before that, we were at 6,002. So, if you take out a few weeks there, we're just sideways for about 6 months. So we are in this longer term pullback consolidation, not a bear market. But to understand where we're at, you kind of have to compare it to where we were in 2013. And back then, we had Mt. Gox, 75% of the market of trading volume. And then they got hacked and lost 800,000 Bitcoins. That was an existential threat to Bitcoin, I think, at the time. Not for many of us. There's probably 10,000 or maybe up to 50,000 people in the world at that time that were not concerned about that threat, but most people did, and it really shook the market. So, and that was followed by a 18-month to 2-year bear market. Nothing happened like that here. We are stronger and stronger every day. More and more exchanges are being added, more products like futures and pretty soon ETF, as well as new places to buy Bitcoin. So I think every year Bitcoin grows. Liquidity begets liquidity. So we just will keep adding up. And zoom out, and it's a straight line to the top right.
Yeah, just talking about market structure and everything, and talk about this sideways period. It is like it feels like there has been a lot of achievements on the side of creating these frameworks and networks to where these new instruments like this ETF and possibly like other different ways that these traditional guys are getting in. It seems like you're saying these business cycles. The next one, there's going to be a lot more people to have the option to actually buy. And we might still run into that same problem of a limited supply on the OTC markets and the exchanges. Is something where I'm kind of curious to see when the next real pop happens, how quickly we move. Because I was looking this morning, and it took us about a month to get from 6,000 to 20,000. So, I mean, I think that the market is really kind of shaped up as far as where it's at now, to be able to onboard new people and really kind of take off. But the whole analysis side of things, that's where it's like I just see these bigger general overarching things. And it's hard for me to narrow down in the little parts because when you're looking at all this stuff, it's hard to, I don't know, those kind of things just drive emotion. And it's like, let's just keep our head down and focus on what we're working on, because we know it's going to be, the fundamentals are there and it's going to work out. So I really, appreciate guys like yourself bringing legitimate, non-biased information similarly, which I'm not trying to toot each other's horn so much, but it helps, man.
Yeah. Well, I think that everybody thought, there's all this institutional money waiting to get in with the CME, pumps the price way up. And it turns out that was kind of a dud. Right now, even today, there's only 14,000 Bitcoins in contracts on the CME. So it just hasn't happened yet. The ETF will come and there'll be a pump for the ETF. And then it will turn out, look, there wasn't as much demand as we all thought, but it's going to slowly grow, right? That bottom, the baseline of demand is going to slowly grow. And people, as they rebalance their hedge funds and they rebalance their endowments, and all of these high net worth individuals are rebalancing their stuff, they're going to be like, okay, yeah, we'll put 5% into Bitcoin, and that will just slowly add up over time. And we'll have these spikes and these pullbacks just like we've always had. But I don't think 2014 and 15 was a bear market. We're not in a bear market today.
That's kind of something else I wanted to bring up is, it's like when people kind of talk about capital inflows in the space, they always kind of use just that general term, institutional money. And they never really consider the different pools of funds out there and the different assets they're invested in, and why they're invested where they are. And I just kind of where are your thoughts on where different types of investments might start trickling into Bitcoin. Like, we have definitely like, money tied up in like 401ks and pension funds, like, baby boomers, retirement money. And obviously like a large amount of that's also fueling the stock market. And we can kind of see like, Generation X and millennials like slowly starting to look into like not so much the pensions and 401ks, but definitely the stock market to kind of try to realize gains like that, as well as things like real estate. Like my biggest like analysis when I'm looking at just like the general markets around the world is like you have this craze with like, let's tokenize real estate and just tokenize all the things. And I don't think people really think through that a lot of money sitting in real estate right now that's not there specifically to like develop land and actually turn it into something like revenue generating is literally just sitting there because it's a safe, finite resource that can kind of slowly realize gains, like somewhat predictably. Obviously not so much with like the housing bubbles like back in 2008 and kind of now again, but a lot of that money is more of like, I'm just parking funds here and not like trying to develop land into something generating revenue. And, just like your kind of thoughts on like the different cases for like each of those pools of liquidity kind of trickling into Bitcoin.
Well, this touches on the cultural side. I think, fiat money and an inflationary system pushes people into credit markets, pushes people into stocks instead of holding money for the long term, right? I think Bitcoin is a lost cause for 90% of boomers out there. They're going to retire and just live out, probably cuss at us Bitcoiners. I actually talked about that at on my Bitcoin is Freedom podcast that I do on Patreon, and that is that I'm kind of scared for this like nationalistic baby boomer that I can see coming over the next decade, where they're cursing at Bitcoiners, and it could get to the point where they're using the government against us because we're destroying their pensions. But I don't know. That's total 100% speculation. I think Bitcoin is for younger people. And as younger people, like I've said many times, somebody that's born today is never going to have a bank account, most likely, unless there's some sort of Bitcoin banks out there. They're not going to have a bank account like we have today, a traditional bank account. So this is a younger person's game, and it could take a generation to get this ingrained into us. Like key management might take a decade or a couple decades, but it's coming. Speaking of real estate, I'm glad that you mentioned that, because I actually think it's going to crash. It's going to be really bad for real estate when Bitcoin hits faster adoption, because I think a lot of the price of real estate is speculation, especially in these bigger markets, like New York City or a beach house in Brazil or Australia or something. It's going to be really, really bad for those real estate markets, because if you can get almost a guaranteed 5 to 10% just by holding Bitcoin, and it's liquid, that you're never going to be investing in offshore real estate. So it's really going to affect that market. It's also going to affect the bond market. Look at the negative interest rates we have and the 0% interest rates all around the world. So it's just the whole dynamic of how we hold and invest our money is going to be changed within the next 2 decades.
Mm-hmm. And I mean, I definitely like, I'm definitely worried about like the baby boomers kind of sticking with like where they're parking their money and that kind of blowing up in like the nationalist fervor, like you're saying. But like that's really the one case in my mind for products like, the ETF by the CBOB or CBOE that's up for review right now, is like, things like that really like, a baby boomer is not going to have to sit there and like think about key management or like directly like interacting with the system. Like they'd be able to kind of shift over like some of their retirement investments and expose themselves to the upside without like all of the things that would kind of scare them away or alienate them. You know what I mean? I'm sensing a Blake wanting to jump in.
Yeah, I know. I just wanted to make some comments about BTC speculation, and people wanting to get into BTC is very interesting in terms of it driving speculation away from other things. One of the most extreme examples of this is people would speculate on urea, these 1-ton blocks of urea where you have the dehydrated urine that you can ship to different places in like Africa and stuff. You can just disperse it on the soil, you get nitrogen back in the soil, then you can grow crops where you previously couldn't. People will speculate on urea because they're like, oh, it's just like, a penny stock or a low value commodity where you can buy a ton of it and then you can get a lot of volume of it, and then when you have enough money to be a whale and hold it, it makes it so that the people that need to have this stuff to be able to live and survive are going to have to pay through the nose for it. And that type of speculating on something that people desperately need is horrible. It actually ends up making it so that people starve to death and stuff, and that's not good. And one of the great benefits of digital storage of value is that digital storage of value is better than physical storage of value. There's costs in terms of physical storage of value, and the costs of digital storage of value in the case of Bitcoin are mostly going to be transaction fees and mining. And so there's not this decay of value in terms of storing something for a long time. Like, let's even take like tokenized gold, for example. It costs money to physically store gold and to secure it. So then by definition, the value of your tokenized network is going to have a half-life of decay, where the value of your network goes down and down and down as the cost of physically securing the gold eats up, what's going on in other places. So what this is going to do eventually is it's going to drive real estate speculation into digital storage of value speculation. It'll normalize some of the prices of real estate, which is really important in places like Canada, where Asian speculators are coming in and they're driving up the price of property so much that it's becoming very, very difficult for young homeowners to be able to get land where they need to. And this entire hypermassive paradigm shift is going to have very, very, very far-reaching implications and consequences. And so I think that that's an extremely fascinating topic that really should be looked into and talked about a lot more than I think that it is by people that are talking just about technical analysis in simple terms of you should do this or you shouldn't do that. I like what you guys have been talking about in terms of Ansel talking about here's the upside, here's the potential for upside coming up, here's the potential for downside, here are the weighting factors on each one. If this happens, it'll move this way. If this happens, it'll move that way. I think that's a much more even-handed way of giving people market information than saying, if you do this, I think that you're going to benefit. And then all of a sudden you get people starting to short or long the market on an ephemeral horizon or a short horizon, and then people get wrecked, and that's not the best advice to give. What I wanted to talk about briefly is that Bitcoin, after it goes through these lateral consolidation movements, as the supply of Bitcoin is very inelastic, what ends up happening is we move into what's called a deflationary spiral. And deflationary spirals are fascinating because we've had a lot of inflationary money and paper gold chasing after things for a long time. So people aren't used to looking at the signs of what is going to lead into a deflationary spiral. And deflationary spirals are really, really cool. Like we were saying before, inflation encourages spending, it encourages credit markets, and having this really, really strong deflationary medium of currency is encouraging other things. And even if only for the diversification into different behavior, that's good. But it's also good in terms of incentivizing people to save. When you have sound money, savings are encouraged, and encouraging savings has not been going on for a long, long time. So I wanted to ask Ansel, what do you think about people saving Bitcoin because it has deflationary features, and then doing things like trying to enable price balance and price discovery across different markets, as opposed to technical analysis, actually trying to see if you can make clean arbitrage cycles where you're assisting in price discovery and you're actually able to generate some interest on your coins in a much more risk managed way? I know it's not totally risk managed because, the systemic failure of an exchange going tits up with your money on it, that's definitely not something that people should write off. But how do you feel about a more top or a more bottom-up approach to trying to add value to the network, as opposed to some of the shows that are strictly just talking about technical analysis and what the individual reading the technical analysis thinks that you should do based on the information that they have? Do you have any thoughts on that?
Yeah, I think, well, like Bitfinex, they have their funding. Is that kind of what you're talking about, where it's not totally risk-free, but you can earn money on lending out your Bitcoin on Bitfinex? for.
Yeah, that would definitely be one way. So you're lending it to somebody else. So that's actually a real world use case where it's like this person's getting value, the time preference is being figured out. We don't need LIBOR anymore to calculate naturalized or to calculate rates of interest. It's more of a naturalized rate of interest. And what you're talking about is actually another good way of doing that, as opposed to arbitrage. It's a little bit more risky because arbitrage is very risk managed. But I think that you are touching on another very good way of here's where actually some bottom-up value is coming, and I wanted to know how you feel about those ways of creating value as opposed to reading charts of the past.
I don't know. I kind of separate them mentally between reading charts and that bottom-up type market-making approach. I think Tether really helps, and a lot of people are dissing on Tether, but Tether makes this market much more liquid, creates opportunities to arbitrage. Lightning will do the exact same. So, there could be some sort of decentralized exchange that is actually connecting in a way other large centralized exchanges and making arbitrage possible easily that way. I don't know. The technology for me is kind of like infinite. You can make any technology that you want to solve a certain problem. And now that we have the Lightning Network, the solutions, if it's valuable to the market, it will be created. So, but I did want to touch on that, what you said about the urea or whatever it's called that they ship around, and how the speculation actually is bad for the end user. Same with real estate, right? So they build all these high rises and stuff, and there's homeless people everywhere. Like, I think it was Rick that said on this show before that there's more empty homes than homeless people in the United States. So when this whole dynamic changes, the whole paradigm shift happens, you're not going to see that type of behavior as much. You still will see some, obviously, but it'll be greatly curtailed. Oh, and by the way, you introduced me to that idea of a deflationary spiral. I went to school. I have a degree in economics, and the first time I heard deflationary spiral was from you on WCN, I think. So that's crazy.
Who knows, man? Yeah, that's a interesting way to look at this. Neen's got some questions.
Yeah, so I'm probably the only person on the show right now who has never used an exchange, because I just fundamentally do not trust them. And the only type of exchange I would be actually interested in using, even just like for any kind of trading whatsoever, would be a decentralized one. So I was wondering what your thoughts are on like what the greatest difficulties are that we'll be facing with actually building those in terms of like the market structure and everything, because it's obviously completely different from like anything we've ever seen besides just person-to-person exchanges.
Yeah, I think there's a big need for decentralized exchanges, but the incentive structure is kind of messed up. I mean, it's hard to monetize it, right? It's hard to make money on it. And BISC is making some efforts in that direction of their own token. I don't know if that's going to work or not. I think they have at least they have some actual utility behind their token versus 99% of all the rest of the market. I think decentralized exchanges will be very big in the future. When that comes, I don't know. I think we kind of, this infrastructure and the adoption kind of has to happen. Once we're at 75% adoption or something, there's going to be massive amounts of demand that will create new types of business model opportunities for these decentralized exchanges. So they might just have to wait. They might be too early. One thing I do on my show is I try to do more education or information focused and with a little bit of technical analysis stuff thrown in. And that a lot of people have listened to my show and gone to this route of not trusting the exchanges, even though I talk about trading and things. So there's something out there for everybody. I totally think that you're probably the smartest one here, not using an exchange, but who knows?
Yeah, I just wanted to make a comment on like that. The decentralized exchanges, I'm with you. going to be big in the future. But yeah, it feels like we are in this first iteration of these things where y'all were talking about lending and stuff, and there's salt lending here near me, and just like the different ways to do things. It seems like we just went through that whole token and ICO mania to where all these first iterations have that sort of tied into it. But now that we got Schnorr signatures coming down the line and Lightning getting more developed, and things like Liquid coming out, I do feel like yeah, the pieces will come to place where we will get those things together. So yeah, I'm excited about those too.
And it takes a while for this new technology to really make an impact. We're just getting Lightning built out now, and it's still beta with channel limits and all those things. So it might take 2 years before some brilliant idea hits somebody and turns it into a great decentralized exchange. It takes time.
Sorry, real quick, Blake, but is my take on decentralized exchanges, and I actually I get into arguments with acnics about this quite frequently, but I really think the one thing a lot of people don't want to look at or acknowledge with them is that really the big issue with the entire just design or architecture of them, it's all on the fiat side. We can build out all the technology and the methods of incentivizing things on the Bitcoin side of things, but it's the real last mile problems to make them a viable solution in the long term is all on the fiat side. And I mean, without really addressing that, you introduce all kinds of liquidity constraints in terms of the I guess the risk profile of each individual trade, the overall amount of liquidity that can really kind of pile into markets like that. And without really addressing that, you're kind of looking at things like BISC, where I mean, it works great, for an individual who just wants to privately buy a personal amount of Bitcoin to hold or use, or somebody who wants to go liquidate a little bit for small uses. But there's too much friction for that to really build up in terms of liquidity to really compete with something like Bitfinex or Coinbase in terms of actually being a substantial part of the price discovery mechanism. And I really think things like Tether or tokenized fiat coins, it's we need them. You have to have some kind of representation of fiat that is as frictionless and easy to move around without kind of checks and balances like the banking system, or you can't really address those liquidity constraints.
I was going to jump in really quick and just talk about, there's certain problems with centralizing things, and there's certain benefits with centralizing things. You centralize things, they tend to go faster and become a little bit more unstable. In terms of mining, people are obviously aware if mining gets too centralized, that's not a good thing. But I think that price discovery and interest rate reading jobs, so to speak, becoming centralized is also a risk. If we have several really, really massive exchanges and they're all doing arbitrage themselves, and so there's no decentralization in arbitrage, that's not really a good thing. So, I mean, I talk about arbitrage a lot, because I feel like other people don't talk about it enough. It is a way of trying to initiate naturalizing rates of interest and price discovery. And Bitcoin is emerging. It's an emerging market. And a lot of people talk about technical analysis a lot, and I'm pretty critical of that because I think that emerging markets are not appropriate for technical analysis. I think you can definitely glean some information, but when a market is emerging, especially when it's got a global jurisdiction and there's all these places where Bitcoin is being traded, and the price of Bitcoin is deeply affected by factors that are local to where it's being traded, I think that price discovery mechanisms through individuals taking money and balancing out markets and being able to make, risk managed money that way is not only providing a service, but it's more useful than a lot of just plain speculating on images of the past and stuff like that. And again, I like the way that Ansel talks about technical analysis, and then he also goes back to the fundamentals and says, here's what the volume is doing, here's what the volume has done historically, and here are the ways that it can go in both directions. And I think it's important to have that extra information, because technical analysis, some people are thinking that we've got lots and lots and lots of information about the market at these volume levels, which, you know, when you compare to the legacy, or not legacy, but older, you know, price movements, they weren't at the same volume. So technical analysis can glean information, but it's not as solid as I think some people think that it is in other markets where you've had a consistent level of volume for years and years and years and years and years, and you can look at how different sources of information or different things drive that. So I think that we as a community need to talk about technical analysis, but also talk about arbitrage, and we need to talk about things that, again, are ground up. One of the oldest professions on Earth is, you know, delivery, taking camels with incense and myrrh across the desert from where they're cheap to where they're expensive. And now that we can do this digitally, this needs to be something that's engaged in by a great number of people so that there's competition. I know it's inefficiency decimation at a technical level in terms of arbitrage, and there's only so much inefficiency, but on an emerging global market like Bitcoin that is so fundamentally going to be changing everything, I think that a lot of people getting into trying to make clean, risk-managed, low returns consistently with arbitrage is something that I think would really, really help if more people talked about.
I think one of the problems is just the size of the market, right? We're only at $100 billion market cap, and we have much better arbitrage today and influence that way than we did at $1 billion market cap. So if the next 100x that we go, obviously the arbitrage opportunities will just get better and better. But remember the old days, there could be a $20, $30, $50 difference between exchanges, and now you're lucky to see a $5 difference. So there is arbitrage happening. I think Tether helps it out. To bring it back to Tether and decentralized exchanges, I think that Bitcoin is gonna add pressure to localize the economy more, and there's going to be people are going to be interested in their neighbors instead of their brokers and things like that. So maybe these decentralized exchanges will only scale to regional level. They're not going to scale globally. So BISC might be like, say, Northeast US or something like that. And another decentralized exchange will be for the Midwest, and on and on and on. So maybe these decentralized exchanges technically can't scale. Maybe they're not supposed to. Maybe that's not the role that they fill. But I don't know. There's so many possibilities. And I believe that if we just continue to preach learning and education and study, that people will find the solutions to everything. So
that's a really interesting idea. Just like the regional decentralized exchange, like that's something that, like we're getting into all this, like where it's like we are even ourselves kind of just like as we go along, sort of figuring out like there's all this nuance in between the way that we used to do things and the way that we're going to do things. And maybe it does require a little bit of social adaptation on our side. So, I like the idea of like seeing regional things pop up as far as like the ability to help people on board and move the ecosystem forward. That's a really interesting thought. I've thought about some regional stuff, and there's some 0x guys and there's guys working on decentralized exchanges in this first iteration that are excited about it. So I'd really like to talk to those guys about that. Thanks for bringing that up. That's a really interesting thought.
Well, there are tough problems to tackle in terms of decentralized exchanges, and I think you and Ansel are totally right that localizing it a little bit is extremely meaningful, because what we have are basically regulation structures that are very, very centralized. Decentralizing money is going to decentralize those regulation structures a little bit. People are like, oh, the Bitcoin community is toxic. It's like, well, we're self-regulating, and we take that very, very seriously. And I think that solidarity coming back, because centralization is anti-solidarity. It makes people not like each other as much. But local solutions bring back solidarity. They bring back the ties that bind society. They bring back reputation. And we need trustlessness at a global scale, but bringing in some elements of trust on a local scale where you have decentralization globally, and then at the trust levels of the decentralized exchange, where Jim and Donna and people are creating solutions at a local level. That actually seems like a great way to get traction in terms of figuring out how to solve some of these really complex issues that are brought up with how do you make a really robust, tenable, scalable, decentralized exchange. It's a very, very difficult problem, and one of the solutions may be not just bringing money, fiat money into the equation, like Shinobi was saying, but also maybe having a minimal trust model because it's closer to home. I think that could definitely make great strides towards figuring out some of these really tricky issues.
Yeah, so 2 points is one that you could actually meet somebody, right? So you can get rid of half of the equation by, if it's a state exchange, like let's say it's just a decentralized exchange for Colorado, then Rick could actually drive to meet the person. And it takes a little bit of the complication out of everything. Another part of that is, oh man, lost my train of thought. What were you saying there, Blake?
I was talking about solidarity, decentralization versus local reputation.
Yeah, so it could be a hierarchy, right? You could have a local group in your neighborhood that gives you some sort of identity, right? And then you have a larger group of your city, and then even a larger group of your state. And that is the decentralized exchange is actually made up of these hierarchies of groups. That's really interesting. But how about how will decentralized exchanges affect big exchanges? Are they going to push out, or do you guys see? I'm kind of flipping the tables. Do you guys see like decentralized exchanges ever out competing these big centralized things?
Well, I mean, like where things stand now, no. But like I still think that they can offer like very important roles in a few different ways. Like one, obviously, like you're introducing another opportunity for arbitrage. Like given the scaling constraints that decentralized exchanges face, that is an easy opportunity for like somebody well capitalized to like accumulate Bitcoin cheaper on a more centralized exchange, and then just kind of arbitrage that out to decentralized exchanges. So I would imagine things would evolve where you have kind of a more directional flow of capital from centralized exchanges out to the decentralized exchanges, and then kind of that time preference introducing like a bigger lag in the other direction because of the kind of friction and constraints and like moving that back the other way to kind of fill in the arbitrage loop. And then also, like I think it'd be remiss for me not to talk about like how pools of liquidity really affect like consensus as far as like the protocol rules themselves, because like when you really talk about like a node's importance in the network as a whole, as far as like an entity enforcing consensus, it really is proportional to the amount of liquidity that node is representing. And so I think like the biggest thing I see in terms of decentralized exchanges role is kind of spreading that liquidity out more and overall introducing more friction into introducing changes to the protocol. Because like the more pools of liquidity you have, the more individual actors you kind of have stuck in that stalemate where like nobody's really going to like go along with a change unless there's a very clear signal that there is consensus for it. And so I think really the most important part there is that, decentralized exchanges are a good opportunity to kind of really spread that liquidity around and really up the level of friction involved in that.
And just like a quick comment on this, like as far as like the future of this and, centralized exchanges versus these decentralized exchanges, and like just the way that we might have to do things differently in the way that we see the Bitcoin price kind of react to political situations and the way that affects trade. And we might see like during good times, there's a lot of liquidity moving through these centralized exchanges. Whenever things get tough, we see it move towards these regional areas.
Yeah, that's definitely possible, and I think that it's interesting to study sociology and biology, because the more sophisticated that our computer systems get, the more they mimic biological life. Like when you look at incentivized hardware or incentivized software spreading, like you have, the freeware software model. I mean, it works pretty good, but then you have Bitcoin, which actually incentivizes the software to spread out through our culture, and it's almost like the mycelium archetype of the spreading of spores and stuff like that. And it's almost like you can make comparisons with the local decentralized exchange and then bigger exchanges, and it's almost like the OSI model of the internet, where the hardware layers are closer to the bottom and then more advanced software layers are at the top. Sociologically speaking, reputation and solidarity are the fundamental like machine code layers of things that need to happen for humans to continue to want to engage in human action and have respect and love for one another and have the ties within society be strengthened. It's really, really great to have the global scope of Bitcoin, but we also need to chunk out different layers where different things transpire, and without base layers, things can start to get wonky at the top. So I think that thinking of decentralized exchanges with that type of thought process in mind is extremely valuable, because when we think of everything as, get rich quick at a global level and how are we going to, move massive amounts of money around, we start to lose the thread of what kind of bottom-up value can we create, and we start to go actually necessarily top-down, not just top-down in terms of central planning, but top-down in terms of going for that high-level code before we have the machine code secured, and that's definitely not a good way to plan anything. So I think that those types of comparisons are very valuable to make and to consider and to keep in mind.
Yeah, speaking about the spreading of liquidity for consensus changes, like Shinobi was talking about, I never even thought about that. I think that is a really good point. But by the time that these decentralized exchanges and all that come around it in a big way, I think we're going to be past the point of major consensus changes. We almost are pretty much past that point. I know if it got really centralized like Bcash, you could just push through anything you wanted. So, but I think Bitcoin itself is past that, and I would be less worried about that than other things. I don't know.
I mean, it's not really a big like point of worry for me like it was, say back during like the whole UASF and the New York agreement. But I mean, it's still in the back of my mind like a potential to worry about, because I mean, I don't think we're at the point where we could see like a complete unilateral change that did not leave Bitcoin intact like at some areas around the world. But I do think there is still a decent risk of like a stratification of like enough economic entities in the world kind of doing that they pretty much like lock themselves into like some version of thing and leave Bitcoin isolated in like more underdeveloped parts of the world. So I mean, it's definitely not like I'm scared of this like at this point, but it's definitely something I still think has the potential to cause problems, at least in this point of like, market development.
Oh, I wasn't muted, and then I muted myself. Yeah. So, yeah, I agree. I think we always need to stay vigilant. But I think right now we have everybody's kind of their immune system is peaked, and so we're doing a good job of that. And not saying at all that we need to stop doing it. It's totally necessary, but I think it will happen kind of naturally. And the more I think about the past, I wanted to get your guys' take on this. Is the more I think about the past 2 years, that was actually a mining centralization debate. It wasn't a scaling debate, because now you look at Bcash and they are centralized around the miners, and so have we already fought this mining centralization debate or conflict, whatever?
Hannes, I'll let you go first, Shinobi.
Eternal vigilance.
I mean, I still think that it potentially could be a factor if a government like China really went like ham and just like, we're going to do a news blackout. Like, we're going to go around and round up all the equipment that they have, because like, even though the government there is kind of trying to push like miners out of the country instead of just outright ban things, I do think there's still a pretty good chunk of the network hash rate there. I think it could potentially cause problems. And I mean, my biggest worry is not like the network like being permanently unfunctional or anything. It's the potential of like a knee-jerk reaction by a large amount of the community to fork off the proof of work, because we start seeing like periodic reorgs and have to wait for more confirmations to really be certain of something, or like some coins are like blacklisted and that is used as a basis to like really like run a scare tactic instead of kind of waiting for manufacturing to really level that out in the long term. But I definitely don't think that it's the issue it was perceived as last year, because I mean, really at the end of the day, I mean, if you want to go like as crazy to like worst case that this could possibly get, with like all the miners were one person, they still need the consent of the economic participants, because like they're the producers here. Like they need us to buy or value their coins to be able to fund their operations. And if like the entire rest of the economic actors in the space just stand in unison and go, fuck you, like there's nothing they can do about it. I mean, like even if like 100% of the miners got together and reorged the last 6 months of the chain, there's going to be some block explorer out there. There's going to be some data set where somebody deserialized the whole blockchain and has it in some conventional database for like data analysis for whatever purposes they're doing. And that's not going away. Like that's not getting reorged. Like they can reserialize that. They can drop the chain out there. Everybody can verify it because of the inherent way that the cryptographic commitments in a blockchain work. And I mean, really at the end of the day, like it just needs that one copy to be able to just prove this was the chain. And we could just bootstrap from that again. And I mean, I guarantee you, like those copies of the chains are sitting out there in conventional databases. And those databases aren't just going to delete themselves in the event of a chain reorganization. Like they're not operated by a node. They're not managed by a program that's just going to see new input and go delete everything.
Hey, we got Janine back. But yeah, man. I mean, like I was gonna say that, yeah, the whole past 2 years, it does seem like it was a little bit more than just this scaling debate, like the idea of like centralization. It's like coming back up now when people are talking about proof of work change and stuff. And I don't know, I feel like we're still in this level where we're measuring centralization to decentralization, because I hear so many people say, oh, it's we won't sacrifice decentralization, but my company is going to do this. It's like we kind of like just use words sometimes where we're still really kind of defining them. Yeah, Janine, you made it back, man. Good job.
What's your opinion on the thing that you didn't just hear us talking about?
Well, I don't know exactly how I would talk about it from a trading or market structure standpoint, but I mean, I'm not scared of mining centralization, because like I agree with a lot of people who are saying that we're reaching a point where that's probably over and it's probably just going to get more decentralized from here.
Yeah, I think that any type of a deep chain reorg or any type of mining malfeasance is kind of like bringing your child to the king and asking for them to cut it in half so that you can both bring half of the kid home. I mean, you definitely don't want to do that. It's going to compromise the value of your child to cut it in half.
But yeah, it's that's it's a thing that like markets are going to, like they're working it out. I mean, we can see like right now that like the Antminer S9, it's not the most efficient miner out there right now. And in terms of like this current generation, it's the least. And I mean, like to like really look at like the situation with Bitmain, like their last 10 nanometer fab attempts have just been fucked. So that, like, as far as like them trying to move to the next generation of their chips, they've fucked it up the last 2 times. Like, and we can see clearly over like the last year or so how they branched out into ASICs for as many other coins as they can. Like, and all of the like capital investments they're making, like if it started like just in the crypto space, but like now with like this investment in Opera, like they're kind of branching out into like more conventional tech companies. Like they're scrambling to just amass as much capital as they can. And like ultimately, I don't think ASICs, at least in terms of crypto mining, are really their main business model in the long term. Like I think that from their perspective was just how they funded themselves instead of taking like huge risky loans from private investors. Like they did like, you know, take private investment in the beginning, but at a much smaller degree than you would expect from a company that's blown to this size. And like crypto mining is kind of how they were able to do that. And like when you really look at Bitmain, like a lot of people I think don't even know this, but there are 2 CEOs, like Jihan Wu, and then I forget his first name or last name, whichever the Asian format is.
Nobody knows of him.
Is the hardware guy, and like they started this company as partners. And McCree's entire like interest and reason for getting into like business with Jihan was ASICs for deep learning. Like that was his intent from the very outset. And we can see now with the Sophon line that, you know, Bitmain's kind of been low key launching and starting to compete with companies like Nvidia. They're moving into that. And I think like really that is their long-term business model. Like crypto was just like the way to fund their company and like kind of just another business they can operate as long as they're not doing it at a loss.
All right, you guys, it's been an absolute pleasure and an honor being on. I'm always so happy that you guys invite me. I don't know why you invite me, but I'm always happy to be here. So I got to duck out. And again, it's always an absolute pleasure, you guys. It's been an honor.
It's always an open invite, Blake.
All right, thanks, man. Thanks.
See you later, Blake.
But Janine, I think you wanted to kind of toss in a privacy comment.
Yeah, and this is something that a few people have addressed, but not too many. There was a comment by Ari Paul, I think, a few weeks ago, or maybe several months ago, where he was saying that he thinks any kind of privacy upgrade would scare off institutional money. So I kind of want to know what you thought about that opinion. If you think that either like is the role of institutional money even big enough to have a big enough effect to like damage Bitcoin if that were to happen, or also do you think institutional money would actually all pull out if there was a privacy upgrade and that was looked on as like regulation unfriendly or something?
I don't think it would affect Bitcoin long term or anything. It would definitely affect it short term. But yeah, I've thought about that in the past. I actually thought about like Coinbase might not be able to use Lightning or what, you know, some of these regulated exchanges, because Lightning is so much more private than, you know, on-chain transactions. So yeah, that's possible, but long-term holders, I don't think are going to be that concerned. I think maybe exchange, you know, like Gemini or Itbit or some of these OTS, the over-the-counter desks might be against that. But I don't think like the long-term pension funds, endowment funds, and those types of people are going to be worried about the privacy. I could be totally wrong, but.
Yeah, to be honest, like this is something that I'm a little worried about myself, just like the idea of like putting privacy on the base layer and the political ramifications of that and how it could like affect the consensus within the network. I could see it causing some contention, but I understand it's like there's a strong movement that's the way things should be done. And I really kind of am up in the air on this because I sort of like don't really ascribe to 100% on any of these economic theories, kind of leaving myself open to others. And I just feel like, yeah, these kind of lost my train of thought. What the heck was I even talking about? I'm sorry, man.
Privacy on a base layer.
Yes. Okay. So yeah, I just see that argument kind of coming back and forth. And, if the dip came down the line as far as like things really being ready to go for that, I could see that causing it might be, a long fight, kind of like SegWit, and it just takes a while and eventually it happens. But I do wonder about the store value feature there whenever you start letting privacy and the idea of auditability and thinking like, oh, this supply is solid. And that's where, I mean, like, I know that like we're asking people to trust something because it's so audible and it's easy to see, but like whenever we start talking about the privacy thing, it's like it does bring in the political aspect and a little bit of the trust, kind of is like we're asking them to trust a little bit more. So I don't know, even myself, I just worry about that as far as a future contention to work, that we might have to deal with.
Well, even today we see a difference, right? I don't buy large blocks OTC, but I've heard stories of large blocks OTC that are virgin coins being more valuable. So fungibility is more valuable, and there's going to be a lot of large players that actually want the fungibility and they want privacy. So it's not just the the retail people that want privacy. It's the guys at the top. They really want privacy too. Think about our whole structure we have is where the rulers have the privacy and the people don't. So everybody wants privacy, and it's more valuable to be fungible.
Yeah, I definitely agree that the fungibility thing's an issue. And I mean, that's where I kind of see like Lightning Network and these second layers maybe providing this privacy that we needed on like a, like if you need it, then maybe it costs a little bit extra, but the option's there. And I don't know, that's where I kind of question, like, is it okay to do that? Or do we really need it on the base layer? I still find myself just kind of like talking back and forth and really figuring it out still. Yeah, that's a good question because I definitely see a lot of that discussion going on here where, I was just at some Zcash event yesterday where, I mean, these guys are very adamant that that's the way it should be done. And so it's something to discuss in the community. It's still like back and forth.
Yeah, I think that default privacy is the way to go because if you give people a choice, they're not going to do it, especially if you make it more expensive. Even though you think, oh, this option is available for people, they still won't do it. At least a huge percentage of people won't. And you need to have, like, Zcash is in trouble because they only have like 1% of their transactions use the anonymity features.
Right.
So there needs to be some fix. I don't know. Maybe the technology will evolve where if you have 1% to 2%, you can still be very, very private. I don't know.
See, I think like that's what's really another important factor of like the block size restriction, because like, I mean, at least until I see like some developments with confidential transactions that can give a guarantee of quantum safeness, like I'm personally like not okay with that. Like I am not okay with the trade-off that could potentially put the finite supply at them. But looking at like things like, coin join or a way to like obfuscate things, even though it's not perfect privacy, like especially when we start seeing like Schnorr move in and then signature aggregation build on top of that, I think that just kind of leaving things like that and letting the economics play out, it will lead to everybody using those privacy features by default just because it's cheaper. Like not necessarily because they want like to actually hide their coins and their movements, but just because like they spend less money in the process. And I think like naturally that economic incentive will kind of in the long term just shift to privacy by default, even if people don't necessarily like seek that out specifically for the privacy.
Right, like this is where it's like the social adaptation, right? It might be like regional anonymity, and yeah, like that global, yeah, just you can still see that on the base layer, the audibility.
Yeah, and that is all education based, I think, because most people, like, if you have two different incentives, one is near term and one is like 2 years down the road, you're not ever going to get that 2 year down the road incentive is never going to make a difference. So it needs education needs to happen, and it could be a generation. I don't know. Just need to keep plugging along.
Yeah, man, I tell you, like when I got back in like around late 2014, it was kind of like, oh, this is gonna happen and we'll be there. But now it is like it's starting to settle in. Like this is a big process and it's a long game, and yeah, it might take a while, but I think we'll start to see those adaptations sort of come in to place as more people come in and like we have these different options. And yeah, I mean, it's really something where, you know, I start seeing regional currencies, and that regional decentralized exchange idea. It's really good. I like that idea, man. I'm really going to kind of try to run with that here. See if I can't convince some people that's the way we should move. But you know, I don't know if you can restrict this. Sorry, I'm like spitballing with it still. But yeah, we're still you know, we're still in this heavy education phase when I thought we would kind of be already adopted and people would be, you know, retail side. But we'll start to see that. I think over the next couple of years, we'll actually be able to do some retail side stuff and, you know, kind of point to like, okay, this is, you know, solving real problems for people on the ground where they're having issues with moving their funds.
And an important part about taking a long time is, I mean, the price has gone up nicely, right? 2x like if you go back in the history of Bitcoin, it's like 0.5% a day that the price has averaged going up, which is ridiculous. So the price will continue to go up, and it's just very important. That hold mentality is very important because, yeah, it's not going to be next year we're all on decentralized exchanges or, you know, everybody has adopted Bitcoin, whatever. It's going to take decades.
Yeah, I try to stress that sometimes at my meetups whenever people ask questions and I'm about the supply and everything. And I really start to put it in their framework when I'm like, when they start to see like, okay, well, you know, this amount of Bitcoin will be mined by 2028. And, you know, the last one will be mined by, I think it's 2144. And it's like, you know, when you start putting that framework in their mind, it's like, oh man, this is some long game. And, you know, that usually does help them start to open their mind a little bit. So, yeah, I'm trying to do that here on the ground, but it is like it's one of those things where a lot of people are just you know, take some rattle in the cages, I guess, before they start to see like you know, that there's a problem, and that seems to be the bigger issue.
And being in it, like we're in Bitcoin, we're down in the trenches, and it feels like a really big deal to us. And like we have a lot of demand personally for these different products. But when you step back and you think about the average person on the street, they don't really know anything. And so there is no real demand in the world yet for these certain products. So maybe Bitcoin needs to go to $1 million before there's actually any demand for decentralized exchanges and these other things.
Mm-hmm. Well, I mean, it's like the internet, you know. I mean, like 20 something years ago, I'm dialing up in the modem, and my parents are sitting there screaming at me like, "What the hell are you doing on this thing constantly? Like go outside, like act like a normal kid." Now they're fucking sitting on their phones on Facebook all day.
Yeah. One of those things, yeah. I mean, like it might have that wildfire moment, like we've all kind of, I don't know. It's one of those things where I kind of like it's like bittersweet, you know. It's like yeah, like you're saying, there's some rattling cages, which that's always a problem. But I mean, like yeah, it will help move people in the right direction. So I don't know. It's like you're saying though. I mean, it could be really quick as far as you know, people saying like, "What is this?" and "How is this used?" To next thing you know, they're cruising around on what they think is like the entire platform on Facebook and Instagram.
Mm-hmm. So I guess
Yeah.
sorry, I was just gonna say like no pressure to like wrap up like right now, but like we just passed the hour mark. So I mean, like if anybody wants to toss like any last topics of conversation or thoughts out, you know what I mean?
Yeah, well, I didn't get a chance to ask it when it was the topic being discussed, but one of the last stories that we did on yesterday's show was about how in Japan, the government is actually making an effort to limit people being able to use exchanges that are offering cryptocurrency stuff. They have like an upper age limit of 70, apparently. And I mean, that seems so weird because that's not usually the case. Like most exchanges, if they have any age restriction, it's like, you have to be an adult basically, but I haven't really seen an upper age restriction. And my theory for why they did that was because, because we were talking about how boomers might actually get angry at Bitcoin because it's interfering with their investments in like real estate and the stock market and stuff like that. And my theory was that in Japan, there might actually be a lot of interest in that generation to actually start getting into cryptocurrencies. And so the government may be trying, it depends. It might either be they just think that they need to like stop people who might want to scam elderly people in some kind of cryptocurrency scheme, or they think they're anticipating a lot of interest and they don't want this like mass exit of that generation from whatever their investments are, whatever the older generation in Japan invests in, that maybe they anticipate a huge exit and they're trying to prevent that by saying, oh no, we're just protecting you from the scams, you can't touch this stuff, it's too hard for you.
That's definitely an interesting theory on that, for sure. Like going back to that whole baby boomer and Bitcoin argument, like that's something where it could cause a problem, and maybe Japan's looking ahead on that game. But just to bring up another topic before we take up, or did you have a comment on that, Ansel?
I just want to say that's a really good point. I think that's too smart for them, though. I always tend to overestimate what their thought process is. They probably didn't think that deeply on it. But if I think Japan is a huge hotbed for this, and it will explode there. If I was a millennial in Japan with almost 300% of the GDP in debt, I would be buying as much Bitcoin as possible. So I think that Japan is still going to be the center for a few years.
Yeah, they're definitely kind of taking a lead on things. But I really wanted to kind of ask you about the psychological effect of, these large group of institutions coming in and large players, and like their effect on the price whenever they say that this is a price that we see in the future, and like what kind of effect that has on the greater market. And like, does that actually start to move the price towards, like, is it kind of like they push an inevitability, like something? I mean, like, I'm starting to get more and more to, watching the price. I'm like, well, I guess maybe these guys were right whenever they said we're not going to be happy till it goes below 5 or something. And, I'm wondering, like, do you think we'll actually see that because of the psychological effect of just constantly reiterating, like, that, this is the price and it's always lower than 5? And I mean, like, do you think that really does drive the market enough to do that? And like, are we maybe seeing like this hodler wall butting up against that at this around this 6,500 mark or so?
I think there's a pretty good support around 6,000 for several reasons. One is that if you had panic sold, you would panic sold already. So there's a lot of selling pressure has decreased. Another thing is that a lot of it's starting to get close to that mining profitability line, and Blake knows way more about that than I do, but I think that has a big effect on it. And I don't think that those guys talking like that has too much of an effect, other than I did see this one, is it Blank Fine or Blank Fiend, that he said if Bitcoin went below 5,000, he would buy. He's some billionaire guy.
Oh yeah, Blank Fine. Lloyd just stepped down from Goldman Sachs.
Yeah, and so that was like a $5,000 put on the market. The market was not going to go down below 5,000 at that point. And a couple days after he said that, then we started moving back up. So maybe that has a counter effect than what they want. I don't know.
Yeah, it's definitely one of those things where I've seen it counter, where it's like, what the CNBC article we covered the other day, where they're like, yeah, it's, these experts are saying it's going down, and, now it's going up, but they still think it's going down. And, then eventually, sorry, we're wrong about this. And, I think, I don't know, to me, it is one of those things I kind of worry about as far as just like what's driving the price, because, we do cover the fundamentals and how much, upgrading is really going on. And, I just worry about the psychological drivers of this stuff and what it could do to everything in the ecosystem. But I mean, like you're saying though, I'm not quite sure that that's actually doing anything but maybe counterindicating, like saying like, this is where we'd like it to go, but it's probably not going to go all the way there, and you might just run up on its bull run without even touching it.
Yeah, I do think another thing is affecting the price, which I didn't talk about earlier, is the altcoin bubble. I think there is still an altcoin bubble, and as people sell and get out of altcoins, it does put downward pressure on the entire cryptocurrency space. So I think that that could have a pretty large effect, actually, and I hope that we see some decoupling pretty soon between Ethereum and Bitcoin. Man, to think about a $50 billion Ponzi scheme, because what was his name? God, Madoff was like $20 billion. That was the largest Ponzi scheme ever. And now we have Ethereum, a $50 billion Ponzi scheme. I mean, there's going to be a lot of opportunity to FUD as this altcoin bubble pops. But I think Bitcoin's price is rock solid right here.
Yeah, just a quick iteration. Yeah, we did that $4 billion investment in EOS. It's just, the bubble hasn't popped.
Yeah, because you just mentioned Ethereum, and that reminds me, after the end of yesterday's show, we actually, I think it was kind of, people were talking about it right while the show was happening, so we missed it, but there was a story, I think, in CoinDesk that the Parity team is now labeling their wallet as only for developers. Like, they're saying it's not professional. I think they use the word professional use or developer use only, because I don't know if it's just because they're so worried now that they've lost so much money that it's all locked up, that they don't want that to happen again, or if it's because of the fact that, like, the ordinary person really can't run an Ethereum node anymore because it's just, you can't, it's not working. And I think that's, part of, I don't know how much that affects Bitcoin, but I think it's definitely, like, the past few months have been really pivotal in that regard for Ethereum, where they've really had to make a choice of, like, are we going to optimize actually for decentralization, or are we going to optimize for, I don't know, whatever they're optimizing for that apparently needs more centralization and an inability for people to run their own Ethereum node. So I think that's going to be interesting to see what happens with that.
Yeah, I saw that. That's kind of funny. I tweeted about it. I said that they're in before Ethereum drops all mention of decentralization and inserts distributed, because they're getting away from this decentralization model. And yeah, I'm pretty sure it's not because of the hack or the lost funds. It's because nobody can run a Bitcoin node or an Ethereum node at home anymore. Yeah.
Mm-hmm.
Yeah. Honestly, like, I've seen the whole Ethereum side of things where it's like these scaling issues, and I don't know, you start to see EOS come out, and it's like maybe that large investment there is just because, they see it as more like a sandbox they can actually play in now, instead of like worrying that they're gonna run into these gas fees. And I mean, just like to bring up the topic too, at that congressional hearing of the House Agricultural meeting, somebody did say distributed world computer. So, I mean, like, they didn't say global world computer. They said distributed world computer. So you were right on with that one.
Yeah, Amber Balde, or however you pronounce it.
Oh, man. So, did you catch any of that hearing yesterday, and like what those congressmen were thinking about?
No, I listened to your guys' show yesterday, so I heard what you guys said about it, and I was going to, but no, the evening got kind of busy for me, so I haven't watched it yet.
Yeah, I haven't fully covered it myself either, but they were talking a lot about, trying to end wash trading and spoofing, and the possibility of IRS getting involved with, these larger wallets and everything. And I imagine like these legal frameworks are definitely going to have an effect on the market here too.
One thing you can kind of see, I think, is this shift from wanting to stamp it out to wanting to control it or get a piece. And you can see that with the ETF, the SEC is easing their requirements for ETFs in general, and I think that's partly because of the Bitcoin, and maybe they want Ethereum and other ETFs. So I think they want a piece, and the only thing they can say now is we need to get rid of the corruption or we need to get rid of the illegal activity. They never say we need to get rid of Bitcoin in general, except for that one senator or congressman.
That guy was nuts, right? Just ban it outright. I mean, it really is kind of scary. Just like they're starting to get into maybe the controlling thing, and they bring up things like Russia and China and who's got control. Maybe we need control. So it's that's the sort of the other thing I always keep my eye on as far as that could affect the market for sure.
So this is one of the comments that I thought was pretty funny from the hearing, that one of the congressmen said that he was talking about the fact that if Bitcoin is successful, that's going to be bad for the dollar. And he said there are people who are alive today because of the profits of the U.S. government, what they make on the U.S. dollar interest, whether it be to fund defense. And then the crypto dog was like, yeah, I bet there's also a lot of people who are dead because of those investments.
Yeah, I saw that too.
That was great, but you notice in that quote they had to put in brackets U.S. dollar interest, because he probably did say U.S. dollar, and he meant it. He meant the control of the fiat money they profit off of that, and so it was not a misspeak, I don't think, by him.
Yeah, that guy is real interesting. Let's see. His top contributors are Allied Wallet, an e-commerce platform that got fined for illegal gambling. Barclays, real estate, like I guess fraternity or association or something. A association for hedge funds and mutual funds. Like half of his biggest donors are pretty much just legacy financial institutions or associations for them.
And that's the real thing. Yeah. Whenever you start to dig in a little bit into the people that are saying those sort of things, it's almost automatically you start to dig just a little under the surface, and it's like, oh man, this is a troublesome character. So, I mean, I won't listen to him, but the people that catch the headline, they're like, oh man, maybe I shouldn't touch it because this congressman said this. So, or my congressman or whoever.
Yeah, I don't think that's going to happen in the long term, because it's every time they have these hearings, it's the same trend. There's instantaneously Bitcoiners scrolling through their voting history, campaign contributions, who they're associated with. And I mean, it's just going to keep happening.
That's beautiful. That's what we want. We want this kind of decentralized regulation that the Bitcoin community provides. I love it.
And it's I know there's a lot of hardcore ANCAPs in this space, and in most things I tend to lean that way myself too, but there is nothing like putting your money on the line that is going to motivate people to pay attention to the political actions that can affect that. And the more people that hold Bitcoin, the more that's going to hold true.
Yep. Sorry, I'm just thinking about that hearing yesterday, and that girl saying, yeah, it's a distributed world computer. And she says, think about it like a distributed world computer, but don't think about it too much. It's there's some intention behind that. That's a dollar value.
But yeah, I guess is any last things anybody wants to talk about? I want to try and get set up. Nopara is going to be doing a live stream of the first Xiaomi coin join in about 40 minutes. Wanted to try and get set up for that.
Yeah, it's good, man. I'm looking forward to that. I didn't even know about that. So I guess we're good, man. It's been a great conversation. I mean, was there something else that you maybe wanted to ask about us, Ansel?
No, I just thank you guys so much. This was fun. Like I say, I watch you all the time, so it was awesome to be on. And for listeners out there, it's bitcoinandmarkets.com, where you can find me on any of your podcasting apps. I should be on there.
That is the single podcast out there that covers market topics on a regular basis. I will endorse. So go give it a listen, guys.
Yeah, right on. And just to reiterate, whenever I'm feeling the jitters, I run to your podcast too, man, just to see what's going on, man. Should I worry or should I not? Let's see. So yeah, shout out to your podcast there at BTC Markets, and yeah, I really appreciate you coming on again. It was a great conversation, and feelings mutual. Yeah.
And I believe his Twitter account is also linked in the video description as well.
Mm-hmm. So definitely, everybody, give him a follow, give his podcast a listen, and thank you for coming on, Ansel. The respect is definitely a two-way thing here.
Thanks, guys.
Mm-hmm. So I guess everybody, next episode should be Sunday, and make sure to check out Ansel again. Toodaloo, everybody.
Later, everyone.
Bye.